All right, good morning. Welcome back here to Trader Money. Great to have you aboard. A really interesting market open this morning, and we've seen a lot of kind of action, but this isn't so much an interesting market open because of the market itself, but some of the individual stories that are shaping up today. In fact, a lot more shaping up today than we've seen pretty much all week. We'll talk about four of them here. Three of them are new. One of them from earlier this week, but I think has severe or significant trade implications. But before I do that, for the challenge, I went to go buy some Pepsi puts this morning. In fact, I actually filled and bought them. By the time I went to type the price in and hit send, the price had changed a little too much, and so I didn't send it out as a challenge trade. And so anyway, I'll be looking for an entry. But you can see Pepsi this morning, and let me pull up the chart here. What it's done, you can see the drop right here on the open. And, it was about 3 minutes in. The spreads came in just a little bit. They were still about 10%, but went in to get in, and boom. The stock dropped 40 cents right then. And, the option jumped about 10%. So I just decided, you know what, I'll hold off. We've seen it bleed lower and lower, here since. But anyway, Pepsi getting pummeled here today, and look, this is a story, right? This is we see consumer staples and utilities lagging a little bit here today. Utilities have bounced back, here since the open, but consumer staples haven't. This is one of those markets where we see some chatter about these safe havens, and that maybe they're not so safe. But when it comes to a market correction, I'll never forget one thing that a gentleman told me as I was learning to trade, and he was showing me a lot of things. And, he said, hey, corrections, they don't end until the best stocks are taken down. And in this market, we've seen a lot of stocks taken down. We've seen a lot of stocks hit and just railroaded. Just absolutely obliterated, from the FedExes to the Apples to the Bank of Americas. We have seen the Halliburtons, and we've seen the Boeings. We've seen the Amazons, really get hit hard. But one space that has held up phenomenally well, this healthcare area with Walgreens. Walgreens has just been on fire here. It's gone from 60 up to 80. It's up 33% in the last 4 months. It started to get hit beginning of December. Getting hit again, pushing into a new low on the month here on a Goldman Sachs downgrade. Goldman Sachs downgraded this to sell, and that is pushing the stock down, 3.8%. The other stock that's held up phenomenally well, and one stock I just, I kept looking at. You heard me talk about it on video, and I was looking, do I make it for a challenge trade, buy some calls on JNJ, and I couldn't get my gut to settle with what I saw. And, I looked at it into the close yesterday. I said, nah, I'm not going to buy calls, even though it's closing above 147. And it's closed above 147, new closing high. Generally, that's a pretty good breakout sign. And I'm getting absolutely lambasted here today. And this is one of the market's big winners, biggest safe havens. A lot of money has been coming into JNJ. And this is an issue with talcum powder and asbestos. Whether or not Johnson & Johnson knew that there was asbestos in their talcum powder for 30 some odd years, and a pretty big lawsuit and all of that. We see. You look at the volume on J&J today. It's already one of their highest volume days in a long time. and it will likely be their highest volume day in years here for JNJ. By the time it's all said and done, if you look at the minute chart and how this is moving, yeah, I mean it is just getting lambasted here. We did see a little bit of uptick, right here on some volume, as JNJ has come out and denied some of this, that they knew that this was up and happening. So it's a big drama. I'll let you kind of, if you're interested, go and check it all out. And it's not a drama that I'm going to sit here and go, well, I know that this side's lying and this side isn't, and so I'm going to buy calls or buy puts. No, I mean, for me, it's a watch and observe type of situation for now. But overall, Walgreens, J&J, these are two of the big top performers in the market, getting taken out in a big way here today, both on sizable catalyst, very sizable catalyst. I mean, you just see here on the J&J chart, I mean, just in the last minute, that's $1 range, a $1 range on the stock in that minute. It's pretty heavy action going on there, but we see the tops crumbling. And that's, I think that's important to note today and about today's market, as we see the outperformers crumbling. The Pepsis, the J&Js, the Walgreens, really being taken down. Now, one of the big recent laggards of late has been the banks, the financials. The XLF, and, more specifically, some of the Citigroups of the world, the Bank of Americas of the world. And this morning, Bank of America gapped down. In Bank of America, you can see here pre-market, trading on lower, gapped on down, and then boom, flew higher. In the message feed, I put the upgrade. And it was upgrade by Morgan Stanley, basically saying the stock is really cheap right here. And they're dead right. The stock is really cheap right here. But they also talked about the yield curve and yield curve inversion, and how there was really little evidence to suggest that Bank of America has any, or yield curve has any real effect on Bank of America stock, which I thought was interesting and gives me something to go research this weekend because, I'm very curious historically what that looks like. But overall, Bank of America, boom, shot out of a cannon, got sold off, has been bought back as the market has been going down, right? This is a stock that, I mean, you look at what it's done in the last, in the last 40 minutes. Bank of America has risen from basically 24.40 to 24.80. And what has the market done during that time? Now, the market has pretty much been falling here since that time. And, it's not affecting the JP Morgans of the world as much, but they are reversing their gap downs. And so a little bit of positive for the banks here today. Are they clearing any major levels? Not so far. Not so far. But is this enough of a catalyst to, potentially have Bank of America close above yesterday's highs? Oh, you betcha. It's only about 10 cents away, right? And so we could be sitting in a situation here where on catalyst, some of these banks close above yesterday's highs, which would tell me what? Which would tell me bottoms are likely in, right? There's a decent chance bottoms are in. I wouldn't want to buy it here today. I'd kind of want to buy it on a little dip Monday or Tuesday, preferably, but may not get that chance, so we'll have to kind of take a look. But, a decent little catalyst here today on a incredibly oversold stock. What I was kind of surprised about with Morgan Stanley is they slapped a $34 price target on it. I was a little surprised they go that aggressive. I mean, that's that's a 40% increase from where it is right now. And that's a very aggressive one. So I think this is something where, we see the IWM, we see small caps, holding up today. In fact, they're green here this morning. They're still lagging, tremendously over time. but they have pointed a little bit green here today, and some of that because of the banks and what this upgrade means. You can see the KRE holding in. Now the KRE and the IWM, the regional banking ETF, and the IWM, they've kind of traded about the same. They've looked very, very similar there with them. So I think that's a story that, could be changing a little bit here today. Again, I want to see that, some of those stocks close above the prior day's high. And I know that I've kind of beat that drum to death in terms of, talking about it. But I think it is one of the most important drums for the bulls in this market. That's the first thing you got to see. And so far, just haven't seen it, and very much at all. Now, we also have Adobe. Now, Adobe came out with earnings last night, and Adobe's down about 5% here, a little bit off its lows, but getting hit on earnings here today. And, they're one of the early earners, Adobe, Nike, Micron. They report earnings before the big earnings season. And a lot of times you can tell the mood of the market going into earnings season. And if you take a look at Adobe's earnings, there's reason for why it's sold. Now, they lowered some of their guidance going forward a little bit into next year. And that's one of the big fears that are out there. Is it worthy of a 5% pullback on that? Probably not. Probably not. And it kind of suggests to me the market, and it doesn't take a genius to figure this out, but the market's pretty sour going into earnings. And downside reactions are probably going to be greater than upside reactions overall. In fact, the investors will likely be looking for a reason to sell, not buy, which tells me that going into this next earnings season, it is highly likely that stocks move greater than what their options price in. And I know options are expensive. I know options are going to be expensive going into earnings. And most earnings seasons over the last 2-3 years, we have seen overall that stocks move less than what their options predict. One of the changes I think we will see next earnings season is I think we will see stocks move more than what their options are pricing in, even though the options will be a little bit more expensive. I think the uncertainties, the wins surrounding a lot of these names are going to create an environment of bigger reactions. And we may see the biggest reactions actually be on the upside, because that'll be the big surprise. That'll be the big, whoa, it's not going to happen on the majority of stocks. It's probably going to, it's probably one of those where most stocks aren't going to gap up, but those that do are probably going to be pretty severe, here to the upside. Now, one that coming up next earnings season, I'm going to play to the upside ahead of earnings, is Under Armour. Under Armour had an investor day here this week and pulled on back, and rightfully so. Rightfully so, if you go look at what they said and everything else. But as I've gone through it, as I've looked at it, as I've seen the analyst commentaries come into it, and it's very mixed. The analyst commentary on Under Armour and on their investor day is incredibly mixed. I look at it this way. I look at it that Under Armour came out and they lowered some of their guidance, just like everybody else is doing. But to me, it looks like Under Armour is sandbagging. To me, it looks like Under Armour is, they talk about this 3-year transition, and they're through year 2. They really kind of made this emphasis that, no, we're still in transition, so give us a break, right? They kind of made that emphasis. And as they lowered some of their numbers, I suspect that they lowered them to the point where they can sandbag in their year 3 of their transition. That makes it easier to beat those numbers. Now, that's my suspicion. Am I willing to put a ton of money on that? No, I'm not. But am I willing to buy this ahead of earnings, next earnings? Yeah, I will be. Because I think the surprise, could really be to the upside. And that if they do beat, that it is one that will react very sizably to the upside in that scenario. So is there likely more downside risk right here? Yeah, there likely is. This isn't something where I look at it today, ooh, it's up and want to buy it. We have Nike earnings up and coming, and Nike will probably say more about the industry and more about the overall environment than what Under Armour's Investor Day did. I think Under Armour's Investor Day was much more about Under Armour than the industry. But Nike earnings will be much more about the industry than just the individual stock, like we saw with Under Armour there. Okay, so anyway, that's what we have kind of going on. Those are some of the stories that are out there. It's not all of them. There are many others that are going on, but we have not seen a day where healthcare has lagged tremendously. And healthcare is the huge laggard today due to JNJ, due to Walgreens, and even as I've been on video, JNJ just continues to tank. It is just, this is in total free fall wow mode, here. And, that is pretty hefty. 500,000 shares a minute on J&J. If you've ever traded J&J, 500,000 shares a minute. That is just beyond insane. Here if you want to see the volumes, these are today's volumes, right? Here's yesterday, right? Yesterday volumes on that same scale, you can't even see them. We're talking about 14,000, 10,000, even as little as 2,000 and 5,000 shares a minute trading hands. And we have 500,000 shares trading hands here. So it's pretty incredible here overall. We are not seeing a change in the market dynamic. We are not seeing the market change its stripes here today, at least so far. This continues to be a market where most of the technicals remain bearish, most of the options remain to be overvalued, and the market has not kind of shown any real insistence to want to have the bulls step in any major way. One stock that I have my eye on for the challenge potential upside here is AT&T. This is one that, look, I think from just a long-term investor standpoint, $30 is really cheap. It doesn't mean it can't go to 28 or 26 or something like that, but overall it's really cheap. If you want to buy the shares on that dividend, in fact, here I'll pull up the dividend here for AT&T, not Bank of America, but AT&T is paying 6.7% on a dividend. That's sizable. Could it get cut a little bit? It could. There's a risk of that. That's one of the fears there. But 6.7% is a huge dividend here. And you look at where bonds are, you look at where everything else is. You don't get very many opportunities to buy a stock that will weather any type of recession with almost a 7% dividend. It is just a phenomenal number, and it's one of those that I think as market rationale comes in, as rational elements come into the market, we see AT&T get bought. As irrational elements come in, we see it, baby bathwater type elements here. And there's still some fears about the transitions with HBO and some of their acquisitions and everything, and rightfully so. It's not all rosy. It's not like AT&T is this, you go look at Disney. There are a lot more positives to talk about when it comes to Disney than AT&T. And yeah, Disney's held up phenomenally during this correction. It's one of the very few stocks that is trading above its pre-correction levels from back in January, February. But no, AT&T has a just absolute monster dividend, and it is one where I would not be surprised to see the next leg up take this into the 32, 33 area, and one that I'd like to buy for the challenge. Here's the hourly. We saw it kind of blitz above the hourly into the close yesterday, and then it's kind of blitzed up a little bit here today. I'll look at it on a pullback, but on a little bit more of a pullback because I don't have the divergences in the trend indicators. So I'm a little concerned that if I buy it here, I'm still going to be buying into consolidation. But if it's able to really kind of hold this 30 level, here today, I may look at adding a little bit there. It's a position where I wouldn't buy short term, meaning it's a position where I'd be looking at the January options. Okay, and looking to hold on to those. My risk reward isn't all that great with them. The implied volatilities are really low, here overall. But am looking at that. The other thing that one of the other things I'm looking at are some of the airlines, like American Airlines. Right, sharp move down. We talked about it. I talked about wanting to buy some puts. I didn't, like with Target and everything else, because they got into just some short-term oversold positions. And last thing I want to do in this market is buy something that's overbought or sell something that's oversold. So we see this snapback above the 7-hour moving average here this morning on American Airlines, off of the oversold region. And if we come in and we put something like the MACD on there, to take a look at divergences here, you can see the MACD actually has a really strong positive divergence associated to it. Stock make new low, MACD not. Fresh move above the 7. I mean, I'm getting a buy signal more than a sell signal right here with the stochastics moving above 20. So it's something where, path of least resistance short term, probably a little bit higher. But that next move back below the 7-hour, I want to look to be a buyer of some of the puts. The options aren't exactly cheap. When it comes to American Airlines, and rightfully so. They're not cheap here at all, but they're not horrid. They're not deplorable here, but they'll get cheaper here today, especially if the stock kind of stays in this area that it's in right now. Okay. All right. So for the challenge, I'm still cash and VXX. Now, VXX, I have the 39 strike. So I needed to go below 39 here today to have value. It could get there by the end of the day. I'm not holding my breath. But bottom line, as I mentioned when I made the trade, I'll see where it is, into the close today, and if it has value, I'll take it. If not, I'll move on and go from there. So, I would take the market, a decent market rebound for VXX to push back below 39. But we've seen bigger reversals. I think probably absolute best case scenario is to see it around 38 by the close, and that's absolute best case scenario. All the cards would have to fall right there, and we'd probably need some sort of announcement. But anyway, we'll see where that. I'll see where that is at the close. It's pretty much sitting where it opened here this morning. And, we'd probably need to see the S&P go green here today, which, is a possibility given the fact that small caps have held up okay. But not something I'm going to hold my breath or add more on an expectation there. But, as we kick into next week, and we start to take a look at some of these stocks that have just been lambasted, the FedExes of the world, the Bank of Americas of the world, we start to see these things get those closes above their prior day's highs. I'm going to get pretty aggressive with them. I'll look to get pretty aggressive. I don't want to get aggressive with them yet because they're option values, but I do think the market is overall just slanted to the downside, and there's a heavy downside risk. And I think it's one of those where any sort of positive would create a 120 to 140 point move over the course of 2 to 3 days here, to the upside. Again, thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.